Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great weekend, safe weekend, and let's kick off a great 2015, folks. This is a quote by Marlo Giacadano. Be strong. Go with your heart and believe in miracles, because anything can and will happen. Market-wise, let's take a look at it out here. We had the Dow Industrials. The Dow Industrials are down 344. Nasdaq's up 78. S&Ps are off 34. Gold contract up $18.30, traded at $1,204 an ounce. Silver up 44 cents at $16.21 an ounce. Platinum up 10 at $1,212 an ounce. Copper down 5.5 pennies at $2.75 a pound. Light sweet crude getting smoked, toasted, roasted, all of the above, down $2.74, trading out at $49.95. Oil, folks, is going to go after. This is a mind blower. It's going to go after that 35 mark, and it's going to be fast and furious. It's just wild. Bonds, the ever-ready bond market just will not stop going higher. Higher bond numbers, lower yield. 10-year up 20 ticks at 127.25. 30-year, folks, which has been the strongest bond out there, dragging everything up on price, down on yield, just basically blew away the October 15th highs. We're up 1.5 points. We're at 147.01. We'll get back to that, but that's an ABC structure on the way up. This is a much larger ABC structure on the way up. King dollar up 237 ticks at 91.62. Now, what happened with King dollar is this. King dollar has been going after the 2005 high. That number is 92.53. We hit 92.05 in the continuous contract out here today. Bottom line, I suspect somehow, more than likely, it's going to get hit. That being said, however, what you absolutely have is that the gold contract and the silver contract is saying, you know what, that dollar more than likely is topping out. Gold's going higher, silver's going higher, the equities are going higher. They're moving with conviction, wide price spread, accelerated volume, all of the above. The thing that's going to get euro. Euro's down 63 ticks at 119.31, and the yen is off 96 at 119.54. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay. You get your cash S&P down 39 bucks. We are at 2018. Now, you have the short-term run on this is that it wants to go into the December 16th swing point, the low swing point, which is 1972. That being said, however, folks, you're going to see this down into the 1820 area quickly. And this is what you have. 1820 is the October 15th swing low. That swing low hasn't got tested. That's the short-term picture. Large picture is some heavy-duty downdraft in an incredible way. So check this out. You know, depending on how long you've been listening, we looked at this before, and what you did is this. When we came down on in October this year, it broke the long-term trend in the S&P. You came down with volume. You got down to 1820, broke the trend line with wide price spread and conviction. When you break a trend line, folks, whether you're going up or down, wide price spread and conviction, bottom line, that's where the market likes to go. In this particular case, as it had done 2 or 3 times in the last 2 or 3 years, it got right back inside the range again. So what did the S&P do? It goes from 1886, jumps back inside the larger trend, gets up over the 1951 into the 2018 level, gets back inside it. Then what does it do? Then you broke down once again the week of the 19th, got back inside it, and now what you're seeing is that you get another breakdown. Bottom line, that sets up longer term, we're 2019. This is setting up 1360 S&P, folks. Okay, it's a big number. Dow Industrials. We go take a look at the Dow Industrials. What you have with the Dow Industrials is this. Dow Industrials right now are down 328. We're at 17,504. And the next stop is going to be the 17,000 level, which is December 16th. So you get the two separate benchmarks, December 16th and October 15th. October 15th is the 15,885 level. NASDAQ Composite. What do we have with the Composite? Composite, same setup. Composite is down 71 bucks right now. You are at 4655, and the December 16th is 47. 4116 is October 15th. That's where this baby wants to go. We look at the small caps. We'll use the IWM. If you're looking at the small caps are down $1.66. You're inside the lower range again. And the small caps are set up. We're at 117.24. That's set up for 103.54. Gold contract. What do we have with gold? Here's the divergence, folks, and it's monster divergence. The divergence out here has to do with the gold contract and the dollar index. Gold is priced in dollars, bottom line, and 90% of the time when the dollar is going higher, gold's going lower. The dollar goes lower, gold goes higher. Percentage-wise, what can happen is that, yes, the dollar can get stronger, gold can go sideways, dollar pulls back a little, gold goes a little bit higher, dollar goes higher, gold goes lower, and both end up actually going higher, but percentage-wise, the dollar would be stronger than gold. So we'll see where this whole thing shakes out. My take right now goes like this. The gold contract is set up, and it's a beautiful setup, folks, to run to 1316 to about 1347. And it looks to me like it's going to be a straight line move. We're up 1850 today. You have 137,000 contracts traded. The first swing point that's going to go after is the 1239. That setup, okay, when we bring that setup and we go over to the dollar index, what you're going to see is this. The dollar index got to a price point today of 92.05. The continuous contract, going back to 2005, is 92.53. Yeah, 92.53. We hit 92.05 today. More than likely, it's going to get hit. That being said and done, it doesn't matter whether it gets hit or not, because gold wants to move. What my take is coming from this is that it looks to me like the dollar, this is the end of the dollar move. And what you have here is this. That would be a 100% move of a move that had started in March of 2008. That's when we were at the lows of 70. It goes from 70 to 92. What are we going to do now? Bottom line, I suspect you're going to go sideways, you're going to back off. We'll get more vision on what type of pullback the dollar will have once it does stop pulling back. What I mean specifically is this. When we stop pulling back in the dollar, if you pull back on lighter volume, that is saying, guess what? The dollar is going to go up and over those highs. Bottom line, stronger but dollar. You pull back off the highs and we pull back with volume, that would be saying you're going to have a larger correction. Bond market. What are the bond market saying? The bond market is saying, guess what? No matter what the Fed's saying, no matter what analysts are saying, interest rates are going lower, not higher. The 10-year out here right now is trading at 127.25. The last swing point is the 128.12. That was generated on December 16th. The largest swing point that this is going after is the October 15th level. And what we have done now inside the 10-year is also get back inside the larger range. That larger range, folks, is important, of October 15th. The reason being is that the bottom of that range is 126.21. We're already a full point inside of it. That's saying the 10 years going to 129. Well, 130. It's probably an ABC structure on the way up. Check this out. This is intense. So your A point would be 122. Let's call it 123. Your B is 130. You're talking $7. You're talking a 132 in the 10-year. And what we have is that 10-year is at 2.03. By tomorrow, we're going to be under 2%. That's going to give you a 30-year mortgage, folks, at 3.9, 3.8. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow's down 329. Nasdaq's up 72. S&Ps are up 40.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You get the Dow down 337, Nasdaq's off 74, S&Ps are off 33, and percentage-wise, what you have out here is this, folks. The Dow's off 1 9/10, S&P 1 8/10, Nasdaq 1 5, and guess what? That is not a big number when you look at what we had happening in Europe today. You had the FTSE down 2%, the CAC in Paris down 3.3%, and the DAX in Germany down 3. Bottom line, they're all moving lower with wide price spread, accelerated volume. Bonds. Okay, so the 10-year, you got an ABC structure on the way up. The 30-year, we take a look at the 30-year out here. What we have with the 30-year is this. 30-year is up 1.5 points out here today. You're 276,000 contracts. You're blown away that the price point, or you have two separate price points. The first time we got up to the 146.16 was on the 15th of December, October. That's when we traded from 141 to 146. Crazy day. Bottom line, has wide price spread, accelerated volume. Gave it up, pulled back to 138, made the run again. As it made the second run for the test, it made it on the December 16th. We got to the 146.19, and then you closed at 145.25. You had 453,000 contracts there. Now, what we have is this, is that we are over that point now. We are going to need more volume. Price-wise, though, it's really launched this baby. What I expect you're going to see is that you're going to see that volume come in the next few days. That there also very well is an ABC structure on the way up. You have 134 up to 46, which is 12, which is going to give you a 150 in the 30-year. We take a look at this and we put it on the continuous contract, and what you're going to see set up here is pretty intense. Because what we very well may have is a much larger ABC structure up, and that would be saying rates are going to go a lot lower. So the first place that I suspect we're going to get the 30-year run into is 152.04, and if you look around the world, it's the same. Now, so that's the technical basis. A fundamental basis around the world, it's the same old deal, folks. Bottom line is that we still have rates that are high in comparison to anything that is out there in Europe. Some of the high volume stocks in this market, you have Bank of America now 54 cents. Apple's off 3.38. If we go over to Apple, Apple is breaking a swing point out here today. It's going to need more volume on the break, but we have 46 million shares. It's breaking a 60 million swing point. It's down 337. Apple's set up now to get down to the $95 level. PCLN price line, price line's getting hit down here. That is down $49. We're at 1,093. That has a high volume low at 1,017. It very well could be ABC structure on the way down. This has been building cause, and if that's what you get, it's going to be a monster, because 1324 is a 300-point A to B structure, which would get you down into the 929 level. If we go over and we take a look at Google, what we have with Google, Google is also down. The 5-letter Google is down 1073. That is also going after the December 16th swing low. Now, what Google had done, folks, Google had already taken out its December, it's October 17th, 15th, 16th, and 17th low, swing low. And it took it out with some juice behind it. Not enough volume, but with some juice behind it. So Google is also making a run down into those lower levels. If we go inside the NDX 100 and see what the weakness is, what you have is this, is that Vipul Communication, that's down 23. Netflix is down 17.5. You got Tesla down $10, and Liberty is down 212. Putting the strength inside it, even so the NDX is down, you have Gilead is up, Gilead Science is up $2.30. Illumina is up $4. Microsoft is up, Monster Beverage at 147. And Regeneron is up 309. Now, inside of that, this is what you have. It's the IBB that hasn't fallen apart yet. The IBB is down 30 cents today, but what you have, now this is really, it's subtle, what you have happening here. The IBB on the 23rd of December, the high was 309. The low was 292. The volume characteristic is 3.6 million. Well, what we actually did today is, folks, we tried to get up over that high. It hit 309.42. The high of that day is 309.94. We've done 1.3 million shares. So the correlation is 1.3 versus 3.6. This is building cause for lower price. If we go over to the leading structures inside the IBB, REGN, the small one that's got an upgrade, it couldn't handle it, ASAP. Regeneron was at 419 right off the bat. We're at 413 right now. It's doing the exact same deal, meaning it's coming into a downtrend with 770,000 shares versus 2.1 million. That IBB wants much lower price, and I expect you're going to get it very quickly. NASDAQ. No, we just did the Index 100, right? The Dow Industrials, inside the Dow. So what do we have inside the Dow? Because these things are taking some big hits out here. Inside the Dow, you still have two stocks that are positive. You have Merck is up $1.04. Coca-Cola is up 3 cents. The rest of them, 28, are all negative. The leader on the way down out here is Caterpillar. Caterpillar's down $5 at 86.80. You got Chevron down $4.50 at 108. Goldman Sachs is off $6.48 at 187. J.P. Morgan Chase is down $197 at 60.52. And these cases, and the financial cases, they're major failures, folks. What you have is this. If we look at J.P. Morgan Chase, that had overtaken its swing point from the 19th of February. That was 61.80. Gets over it. This is the second time it got over it, and the second time it couldn't handle it. J.P. Morgan Chase is on its way down to the 54 level. Right now, you're at 60. Goldman Sachs. We go look at Goldman Sachs. What we have with Goldman Sachs, she's coming down, accelerated volume, all of the above. Goldman Sachs is at 187. That's going after 171. Now, let's go over to the beautiful oil market. If you get ready, folks, okay, you're going to be seeing oil under $2 and gasoline under $2 just about everywhere. And this is why. So if we look at the oil contract first. Oil contract today, we're down $2.76. We're at $49.92. You have a monster expansion of volume. There's not enough room to get out, folks. We've done 346,000 contracts. If we go look at this continuous contract, what you have is that the continuous contract right now is at 49.92. The top of the bar that we've been talking about is 54. So now you're into this bar by $5. That sets up $32.40 test. It's crazy, but guess what? That's what it sets up, folks. And, you know, the more that I'm looking at this, so check this out. If I bring this back even further, I'll bring this back now. Yeah, I brought it back like 20 years. When you bring it back 20 years, you know, it's like, you know, the last time it held down there at 32, but it doesn't have to hold 32. This thing can, you know, run down to like $30, lay around $30, go spike $17. Yeah, some absolute mind blowers, but bottom line, it can be done. We'll see how it operates at 32. You stay right there, folks. We'll come right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You get the Dow down 328, Nasdaq's off 73, S&Ps are off 32. And if we go over and we continue on this oil market, so we'll get into the gasoline right now. So wholesale gasoline right now, folks, is at 137. My take is just going to 110. It's breaking lower, has the volume behind the move, all of the above. And so that indicates, number one, that we're going to be getting even more of a tax break because this is absolutely cash in the pocket ASAP. That's the first thing for all us consumers. The low that was established in 2008 was 78 cents. Now, it didn't stay long at 78. You know, you hit 78 in December, and you're at 133 by February. You know, we'll see if you come off this bottom hard. Or, in fact, you just bounce along, right along as we get down to it, and then build cause for lower price. If you're going to build cause for lower price, what you'll end up doing is this. You'll go down, you won't hit the bottom. You start going sideways, you'll channel up for 2, 3, 4 months, and we'll be able to basically get a good understanding, probability-wise, which way that wants to break. Let's go to Ken in Kansas. Hey, Ken, what's going on?
Hi, Tom. Good to talk to you again.
You also, man. How you been? How's the New Year treating you?
Well, New Year's okay so far. If I can ever get over this cold, well, I will be much better.
Cool, man. Okay. So you want to look at Nova Gold?
Yes, please.
You get Nova Gold, folks. It's an exploration company. The low is for this year. When I say this year, it's going to be 362 days backwards. Is 233. The highs 462. And this got some wide price spread today. It's got some action out here today. Now, do you own this? You looking to buy it? What are we doing here?
Looking to buy when you say the word.
Okay, so what you have here is this. Nova, no doubt, today, is up almost 10%. It's over the 312 area, has the juice, behind it. That's saying, hey, it's going to 398. Let me put this on a weekly for a second. So on a weekly, man, these things have some juice behind them. The problem with buying this right now, of course, is it just was up 8% today. You know what I mean? So it's like, but you could buy it, put a stop under 312, and you're gunning for 440.
Okay.
This is an equity. I mean, this is a personality equity. You got to know that. Do you know what I'm saying? I mean, it's been an equity that's been out there for a long period of time. They have large deposits, but the deposits they have are very tough to basically bring home.
They located.
Their biggest deposits in Alaska,
Okay.
and it's out pretty far in Alaska. So what ends up happening is that there's minerals all over the world, folks. The question is, what can you get them out of the rock for, and then what can you get them to market for?
Yeah.
And that's the number here. So.
What do you think about SLW and FCX at this time? FCX has a little oil in there.
Yeah, don't touch SCX. SLW is at 21. This is going to be making a run for 22, 23. I like that setup. I like that setup on Silver Wheaton. And I can tell you, there's even though Nova Gold is up 10 cents, there are much better setups out there inside the gold and silver market. Risk versus reward. FCX, don't touch. FCX is down $1.48. You're at $22. It's going after this low swing point of 21.03. And FCX's problem, folks, was that they bought into the oil market right at the wrong time. I mean, and they're choking on it.
What do you recommend other than the NG? What is a better one?
I recommend you go test drive the gold report for 30 days. It comes out tomorrow morning. It's free.
All right.
Okay. Have a great one. Have a safe one. And this is a great time to test drive it, folks. You can test drive the gold report 30 days, absolutely free. Go over to TFNN, go into newsletters, go into investment newsletters. And as you're over there, folks, this is the last day if you'd like to test drive our Tigers Den. It's a state-of-the-art trading room, awesome trading room. You can test drive that. We have an open house. Test drive that for a month, also free. This is the last day. Tomorrow that will not be free for that test drive. Okay, so longer term, you see, this gold market just won't stop, folks. This is really cool watching this. They're just edging it up little by little by little. When we started on the air, gold was up $17. Now you're up $20. You're at $12.06. So what that's setting up is that's setting up tomorrow at $12.39. Once you blow past $12.39, let me tell you something. It's not going to be hard to get up to the $13.47 area. Now what it looks like we have is this. Inside all these markets right now, folks, there's a currency dislocation. And it's the strength of the dollar, how the dollar has moved so quickly, the euro has got croaked. Bonds have moved so quickly, and what I expect you're going to have here, you can always sniff out something. And in the market, the gold market is basically sniffing out something. You got to remember something. The gold market in 2001 sniffed out that there's something going to happen down the road. It was 282. Gold took off. Bottom line, that was the financial debacle in 2007. gold goes from 282 to 1900. When you get to those lows, gold pulls back from 1900, gets down to the 1147 mark. That's what it takes to get gold out of the ground. Now the disconnect in the marketplace is that the dollar goes to highs. The rest of the commodities getting smoked, except for gold and silver. They continue higher. What does that say? That's just telling me that you're going to either have a couple of funds that are going to blow up. You're going to have a couple of large companies that probably hedge the wrong way. And what happens with the companies, by the way, folks, they don't blow up. Funds blow up, okay? They go out of business. What happens with the companies, however, is that the companies lose huge amounts of money. Because the broker-dealer community, the banking community, always talk them into doing these hedges, and they take the bait, and they don't even know what they're doing, and they lose just billions of dollars. What we do know is this. We know that more dollar bonds were sold overseas in the last 3 years than had been sold, period. So what does that mean? That means that when you sell a dollar bond, that means that all these different folks in companies and the actual sovereign governments, it's mostly companies though, that they have to pay back their debt in dollars, they have to pay back the interest in dollars. When, if we go look, that you're going to see that if you're in Europe, well, guess what? The euro just went down from 136 to 119. That brings your debt service up so dramatically it's sick. Okay? History certainly doesn't repeat exactly, but in this particular case, even before I was really totally involved in the marketplace, I remember when I was like 20 or 21, the dislocations inside the currencies, and that's when there no doubt was a lot more currencies in Europe because you didn't have the euro. But I just remember just when I was first starting, I was looking and saying, wow, how does... I remember, Procter & Gamble, one of the best companies in the world, they didn't blow up, but they lost might have been millions of dollars then, that they got sold these currency spreads. Bottom line is that that's what I think probably is laying out here somewhere. It's either inside the bond market that someone's on the wrong side of it, oil market, currency market. 877-927-6648. Big Blue. Let's go take a look at Big Blue. They held Big Blue up. Big Blue is down 230 right now. She's making a run once again down to 150.50 mark. The XLE, all the oil integrated service integrations, that XLE right now is down 331. Monster volume, 38 million shares. She's going to be going after the swing low out here of 72. And if you are a fundamentalist, all you have to do, folks, to understand that the S&P is not going to come up with a number of earnings, meaning 15 to 1, meaning the fundamentalist comes up with a cash number for the S&P that they're going to make. Why? Because what you're going to see and hear, and you're going to do this very quickly, is that these large integrated oil companies are not even going to come close to making the money that they think they were going to make 6 weeks ago. And guess what? That's about 8 to 10% of the S&P number. You have ExxonMobil down 233, Chevron's off 440, Schlumberger's down 220, Oxy's off 280, ConocoPhillips is down 320, Apache's down $6, that's almost 10%. Devron's down 230. Let me go over APC. I got to see this for a second. APC. So Apache. Yeah, she's going to blow away the swing point. Apache's going to probably be the first ABC structure on the way down. Apache's just gone from $113 down to 75. She has a high volume swing low at 71. She's expanding volume as she's coming into that level. This is Tom O'Brien. This is TFNN. If you do want to test drive the gold report, folks, go to TFNN, go to newsletters, investment newsletters. You can test drive the gold report 30 days absolutely free. Coming right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials are down 303. Nasdaq's down to 68. You get the S&Ps off 30. You have Marvell's down 29 cents. Caterpillar's off 487. Oxy 286. You get Big Blue down to 236. Let's go to Rich in Orlando. Hey, Rich, what's going on?
For you today.
I'm doing great, man. You ready for a good year?
Absolutely. Absolutely.
Cool. So you want to look
looking at the banking. The banking looks like maybe it's finally starting to do a little breaking of its trend going up.
Let's take a look. And he wants to look at the FAZ, which is the Direction Daily 3 times financial bear. We'll start with the XLF. If we take a look at this XLF, you're down 48 cents. You're trading at 24.21. And what that does is you get in, you have an expansion of volume. Okay, so what you have December 16th, it wants to go after. That low had 36 million shares. We're already at 33 million. That's saying that 8 minutes will probably do 32, 33. So that's saying the probability of that swing low breaking is good. That's 23.68. And you have the high volume swing low of 21.55. So 21.55, that's $3 down. And if we go over to the FAZ now, the FAZ, folks, is the direction 300% inverse correlation of the Russell 1000 financial index. This is off the bottom. You have 4.5 million shares out here today. You get an expansion of volume. And, yeah, I'd say, you could basically, the first swing point is 1467 it wants to run to. But I expect what you're going to see here is that this wants to, run up to this $18 to $19 area, which is the October 15th swing high. Now, remember, folks, is that the leveraged products are daily investment vehicles. And if you really want to get your head wrapped around them, come over to our website at TFNN, and you'll see going to ETF structures, and you'll see there's a couple white papers to explain how these work. They're great trading vehicles, but you just have to understand how they work. But, yeah, Rich, the October 15th swing point is where these markets want to run to.
Okay.
Cooking, man.
Appreciate it. Thanks so very much, Tom.
Okay, have a great one. Have a safe one. So what we do have is that you have a few equities that have already hit the October 15th swing point, taken the October 15th swing point out, and they're running into lower price. Google in particular is one of them. We go over and we take a look at the chip market. If we go look at Intel was one of the leaders out here inside the chip market last year. And what you have with Intel is now, it already tested its high of 37. You're at 36.07. And what you have now is that Intel's going to try to make it run back inside the lower range. And what Intel does have, folks, is a high volume swing low at this 29.65 level. That's going to be a big number, because what does happen is this, is that when markets are going up, it takes quite a while for them to go up. When markets go down, bottom line is that elevator is just vicious. I mean, it's fast, it's furious, it's all of the above. Intel has all the makings that you're at 36. We see what's happened with 34. There's some support of 34, but I expect you're going to break and go to 29. And, from there, we'll see where this baby does shake out. Caterpillar, let's go over and take a look at Caterpillar. Caterpillar is one of the leaders today on the way down. Oh, and this is saying it, too. So check this out. So October 15th, here's your swing point. Your swing point is 90.05. Caterpillar's blowing it away today, and blowing it away with what? With volume. Caterpillar, 10.1 million today, 9.3 million on October 15th. Now you set this up, and we put this on a 3-year weekly. Oh, yeah. So $78 is coming at us. That's how this is set up right now. Let me put this on a monthly. Amazing. Yeah, so $78 is coming at us, and more than we'll see how it hits $78. This thing can actually get down to 59. There's some big numbers below us here that pretty vicious, folks. I mean, in a big way, too. Not in a small way. Alibaba, let's see how Alibaba's doing out here. BABA. Of course, that was the largest IPO of last year. Alibaba's setting up nice. You know, now, Alibaba is down $2 today at 101. And I suspect what you're going to see is that we're going to get down somehow into this $89 area. We'll see if the $89 area holds. You got to 99 today, but 89 very well may be a nice little buy area when we get down to that level. Because what Alibaba will have now, Alibaba has a nice high volume high sticking out there at 115 to 119. So that's a big heads up. We'll go over to Amazon. Amazon's going to be having a tough time. Amazon looks to me like she's building cars to blow away this 284 level. Right now you're at 302. And you remember, now that we're in 2015, Amazon made its high at the end of 2013. That was made in December. Was it December? Let's see. Yeah. No, January 10th. Interesting. 406, January 10th. And right now we're at 302.50. That's building cars to get down to the October swing point also, which is 284. So when you're looking at your portfolio, whatever equities that you have, what you want to do is you want to look at where was this trading on October 15th. If you have a high volume swing low there, you want to understand that the probability is that's where this thing wants to go. Then you can make that choice before it gets there. Meaning that, okay, do you want to sell some, if you want to have this for a long period of time, well, guess what? Sell some calls on it. If you have the stock and you don't want to sell it, you can sell a call. You get the premium of the call. If you get called away, you get called away. You're in a non-losing situation there if you make sure that you do not sell more calls than you own. Let's say you own $200 shares of stock. Well, you sell 2 calls. If it goes down there, you keep continuing to collect premium to make up some of the losses as you get down to lower levels. And, you know, for a longer-term deal, if that's what you want to do, that's a great way. Shorter-term deal, and I mean shorter-term, year, 2 years, or, in fact, how much further is that October 15th swing low down versus where it is right now. I mean, if you're talking about 10, 15, 20 points down, well, guess what? I would be getting out of town in a heartbeat. The bond market. The bond market is just wild, folks. We're going to see, you can expect all week some high volatility, and high volatility equals lower markets with volume. If you'd like to test drive the Gold Report, great time to do it. Go over to TFNN, go to newsletters, go to investment newsletters. You can test drive the Gold Report 30 days, absolutely free. And don't forget the Target's Den. It's the last day for the free Target's Den for the month. We're going to be right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night, folks. And let's kick off a great 2015. This quote is by Christian Larson. Live in faith that the whole world is on your side so long as you are true to the best that you can be. Market-wise, let's take a look at it out here. We have the Dow Industrials down 331, NASDAQ off 74, S&Ps off 32. Gold contract up $19, traded $1,205 an ounce. Silver up 43 cents at $16.20 an ounce. Platinum up 11 at $1,213 an ounce. Copper down 5 pennies at $2.76 a pound. Light sweet crude smoked again. That is down $2.85 at $49.84. Oil, folks, this is going to be wild. Oil wants to go to $32. It's going after its swing low from 2008. Bonds, you have the 10-year up 19 ticks today at 127.24. That's going up into the 130s. You got an ABC structure in the way up. We'll see how it takes out the B point, see if it has the volume. Bottom line, has the price going with it right now. The 30-year, folks, took out the October 15th swing, and that swing was amazing. 30-year up 1.5 points today at 146.30. If you're thinking about getting a mortgage, you're thinking about refinancing, folks, Go start that paperwork, because the bottom line is that you have the 10-year right now at 2. It's going to be probably under 2 tomorrow. That's going to give you a 30-year rate at about 3.8, 3.85. King Dollar up 277 ticks at 91.66. We hit 92.05 this morning on the continuous contract. The 2005 high is 92.53. Bottom line, King Dollar looks like it's at the end of its move. The whole world thinks it's going to continue higher. My take is that it's 100% move. It's at the end of its move. And specifically, the way that gold is moving, folks, gold is moving with wide price spread, accelerated volume. The gold equities are, the silver equities are. This move, we're 12.05 in gold. I expect you're going to see 12.56, 12.36 tomorrow. You're going to see in the 1300s very quickly. Euro down 68 at 119.35, and the yen at down 87 at 119.63. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Cash S&P, folks. Future S&P, all of the above. It is back inside its lower range. And specifically what it has done is this, is that when we came down on October 15th, that week of October 15th, we had broken the long-term trend going all the way back to 2012. We broke it with conviction, wide price spread, accelerated volume. You bounced back inside the higher range. Guess what? We just came back into it, the lower range, with wide price spread, accelerated volume again. And what that sets up, once again, this is going to be vicious. You're talking about an S&P, folks, at 1360. That's a big numbers. Right now, we're at 20.25. NASDAQ Composite. What do we do with the composite? The composite had the price spread out here today, had the expansion of volume, which is really hard to get first day back of the year. We've done $1.7 billion. You're at 4652. And what you're going to see here is that it's going to go after the December 16th level first, then it was wide open as this October 15th level of 4116. Dow Industrials, now we have with the Dow, you had expansion of volume, but I suspect it's going to get a lot bigger. It's not huge expansion. We did $793 million, down 333. Dow is basically going after the 067, which is another 450 points down. That's the December 16th level. Larger issue, though, is 15,855, and that's going to be pretty. I suspect that's going to be fast and furious. If we take a look at some of the ETF structures, and you want to see the expansion of volume, you have it. The SPY did 158 million. That's after making a high with 79 million. You're coming into 197 is going to be the first test. The larger test is going to be 181, and 181. Is a long way down from where we are right now. The three Qs, the NDX 100. NDX 100 comes down with 35 million shares today. That's after making a high out there with 17 million shares and 35 million. We're at 101.42. That is going down into this 90.24 area. Small caps, the IWM. We take a look at the IWM. Expansion with volume today, 48 million shares. That's after the IWM made a high with 27 million. She has a high volume low at 103. Right now, you're trading out there at 117. So you can see you're talking about some very large numbers on the way down. What we had out here today is that you had Apple break a swing point. We'll see if we get the volume behind it. You did 61 million shares. It was 63 million. So Apple... we broke 106.26, and this is how it did it. So check this out. We had got to 105.41. Market trying to get it back up inside. It just couldn't handle it. We're at 106.25. So it's a big number. Let's go to John in Winchester. Hey, John, what's going on?
Hey, Tom.
How you doing, man?
Not too much.
Happy New Year.
Happy New Year. I don't know if the cold is, but I can't get you on the station, so I figured I'd... 1120 isn't working up here for some reason, but
it's not working at all.
Nope.
It's not on the air.
Not on the air, just staticky.
That's good to know, man. Thanks for that feedback.
No problem. But yeah, I forget. Well, I couldn't hear anything about the markets, but is this the start?
The market's going south. You're in good shape, man.
I was looking at NXPI. It looked like it was going to fill that gap.
NXPI. Okay, so this is NXP Semiconductors. The low is 42. The high is 78. The PE is 16. You know, don't go short this one, man. Don't go short this one. NXPI, John, right?
Yeah.
Yeah, I wouldn't go short it.
It looked like it was doing an ABC down, maybe a quick 4 points, but...
Well, I know your MO, meaning that, you know, you pick a lot of the same stocks that I'd pick. This one's just not one of them, man. There's a lot weaker stocks inside that. I mean, I don't, you know, not that you want to go short this one. I'm short SanDisk right now. You know, SanDisk is, you know, going to go after this 80. You're at 95. You broke a swing point today. But
really, I've been looking at that one too.
Yeah, that's a nice little setup. What the difference is this: you see the gap away on SanDisk. It had more clues. It had gapped away at 108, went down to 91. Then the kind of trend bounced up to 104 again, got down to 80, and then the counter trends bounced up to 106. So you could stay in that industry, but that NXP is just really strong, man.
And you told me the MU looked good at 33.85, I believe, so that should be.
Let me just look at MU for a second, because MU, I think MU's coming out with numbers. Let's find. What happens, folks, is that all these numbers start again. Yeah, here you go. So Micron Tech's coming out with numbers tomorrow after the close.
Oof,
yeah,
that's good to know.
That's intense, exactly. Now,
so
MU, so check this out. Yeah, it is. And Micron did go down with volume today, expanded volume. You know, depending how Micron trades tomorrow. I mean, Micron wants to go after this high volume swing low, man. Micron wants to get out of 29 to 26.
29.26?
29 is the high of October, the week of October 17, 26.32 is the low of it, but that's what it looks like it wants to do, man.
All right, thank you very much.
Okay, man, have a great one. Have a safe one. 877-927-6648, and it's going to be amazing just watching the numbers come out one after the other, folks. ExxonMobil, let's go over to those energies. ExxonMobil's down 254 at 90.26. That's going to go after the swing point. That low swing point is 86. CVX, Chevron CVX, there she is. Chevron, huge expansion of volume. 11 million shares, down 450. You're at 108.08, and it's 100.15. That's the 16th of December, and that very well could be a monster ABC structure on the way down. This is Tom O'Brien. This is TFNN. Dow Industrials finished down 331. NASDAQ off 74. S&P's off 30. You stay right there, folks. Our Tigress, Amy Smith from Investor Business Daily is going to be coming up, growling and prowling with us. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials finished down 331, NASDAQ off 74, S&P's off 30. And as we do each and every Monday at 20 past the second hour, we have our Tigress Amy Smith from Investor Business Daily and Investors.com. And folks, if you haven't test drove either the paper edition or the digital edition at Investors.com, you can do that right now. 2 weeks absolutely free. The way you do it, you go to TFNN. You see the banner on the right-hand side. Hit that banner. You can take your choice, getting that newspaper delivered to your doorstep if you like Investor Business Daily, or Investors.com, your choice. Most of us are on computers all the time. Investors.com is awesome, folks. Huge amount of information on it each and every trading day. Amy Smith, Happy New Year.
I thought you might say that.
That's a beautiful thing.
It is a beautiful thing. It's a new year. Happy New Year. I hope it is a great one for you and yours.
And you also. Absolutely, and yours.
Oh,
there's no doubt. There's no doubt. So, the market was basically giving us a couple clues even before the New Year. It was kind of sneaking in there New Year's Eve.
It really was. I said to everyone, all right, market's in correction. It really was New Year's Eve. I said, this is it. It just felt like a change in personality. It looked different. It felt different. And today, certainly, it was different.
Yeah.
We got the NASDAQ, the S&P, and the Dow all below the 50-day moving average. We have oil at a 5.5-year low. We have a higher dollar. Now, the market typically looks forward, a couple months, 6 months out. And we know that 6 months from now, we are likely to have higher interest rates. That's been the thing that everyone felt might be the catalyst that will hit the market. Having said that, after having 3 days down, we might get a bounce tomorrow if there's anything positive, but that doesn't mean that the market's in a really go-go mood. It's been hard for growth-type investors to make much headway. I mean, since Thanksgiving, if you bought a stock and you were hoping to get the typical 20 to 25% gains that some investors get,
yes,
you just really have not been able to make any headway. And that's kind of a clue to, we're in an aging bull market, and this is kind of the typical activity that you would expect.
And, and after 5 years, I mean, that's a normal occurrence, right? This is not, when I look at the way the markets have been, I mean, there's not many times that the market is up 5 years in a row.
No, I was going to say, this has just been a tremendous run, obviously a lot due to the quantitative easing, and now we're done with all that. So that free money's off the table. Now, will the free money that's coming on the table in Europe, and will they do more quantitative easing, and will our economy be a lot stronger? That's good and bad, as you know. We get the higher dollar, makes our exports more expensive. So now this could be a tricky, at least early part of the year.
Talk to me about, I'm going over your notes right here, and it's kind of interesting, these Apple notes, meaning percentage-wise what was going on when Steve Jobs was alive versus when he passed away, unfortunately.
Our research going, way back, it's like at the beginning of the 19th century,
yes.
We have found that about a year and a half after a major CEO dies,
okay,
typically a company starts to not do as well. Now, I give Apple all the credit in the world because they've actually done fairly well considering, but and when a company gets so big, it's very difficult for them to
no
produce.
Doubt.
Yeah, it's really hard. But in the 6 quarters before Steve Jobs died, Apple's earnings ranged from 53% to 122% for the quarter.
Okay.
Now, the 12 quarters after his death, they've only been able to have growth topping 25% twice, and those were the 2 quarters right after he died.
Wow.
So they really have not been able to produce those numbers. Now, everybody knows Apple's not dead. Everyone still has iPhones and iPads and all that kind of stuff, but
sure.
It could mean that as a growth opportunity, the same way that we saw Microsoft. Microsoft made this huge run, but it is not a growth company anymore. Now, having said all that, let me say something positive about Apple. Maybe they will shock the pessimists. New products? We don't know. What will they come up with? They're innovative people. Apple Pay, will that really take over PayPal? That's a great big question. Do you know a lot of people that are using Apple Pay?
I don't, but it's intriguing because because Wells Fargo is so far behind it. I don't know if you've seen it. You probably, Wells Fargo is California. But everywhere around Florida, right? They get all Wells Fargo billboards with Wells Fargo. We have Apple Pay.
Oh, that's very interesting.
It is, and I don't use it. But it's like, okay, there's some kind of a coordination there, that's for sure. Oh,
that's very interesting. Well, the other thing that in doing my research, was kind of really surprised about, 62% of adults in the U.S. would consider buying an Apple wearable computer device. Do you fall into that 62%?
No.
Me either.
No.
Me either. And, of course, we know that, these polls can be very flawed, so we'll take them with a grain of salt. On the positive side, again, we have to look at the positive and the negative of companies. Technically, Apple's not looking strong right now, but their earnings have grown from 6% to 19% and 20%, and the 20% was the best that Apple's had for the last 8 quarters.
Okay.
All right, so they've turned it around a little bit. We'll just have to see. Even though we can pick on Apple and we could say it's not as strong as it used to be, it is still outperforming the indexes. If you had bought Apple, you would have been up a great deal compared to the NASDAQ and the S&P. So Apple at least had a pretty good year in 2014. We'll have to see. I think Tim Cook is a very capable leader. Will he be able to take this company where they need to go for 2015?
And, on the basis of just even common sense, it's amazing. Apple changed the world in so many different ways.
Absolutely.
They, going back, just with the first Apple II, he changed the world. And then, of course, Windows ripped him off. And then he came back from the dead. literally, when they kicked him out, and then he changed the music business, and he changed the phone business. It's hard to, they think they're going to change the watch business. Now, I don't see that one, but it's intriguing because I think, okay, what else can be changed that's that dramatic? And I'm sure there's something out there.
And you know what? We do know that, Steve Jobs was looking way, way, way ahead. So they have a lot of things in the pipeline that we don't know about. Will it be through the TV? Will there be something so completely compelling? A watch sounds kind of silly to me. It just sounds like something I don't need, but who knows? If you would have told me, you remember back when our kids were young, there were no cell phones. When you went to pick them up from school, if they were late from an athletic practice, you just had to sit there and wait because the kids couldn't get on their cell phones. So think about now about communicating with your family or one of your kids. You can send them a text message. Just think how different the world is, even compared to when our kids were growing up and they were little.
Oh yeah, no, there's no doubt about it. I mean, there's absolutely no doubt about it. And that'll change again. I mean, there's no doubt. It's like, okay, but where is it? Because the large changes that we've actually seen is that they've actually, what Jobs was really good at, he took something that was already out there and just rearranged it inside that piece of software.
Right.
Right. I mean, that's and of course, music and communication are two of the largest things we have. So.
And it took things that you didn't know, that I didn't know, that we wanted or needed, like a phone.
That's cool. Yeah.
How did we know that we would use this so much? But now we're on it all the time.
Yeah. I grew 2 more ears. I have 4 ears now. Just 2 phones sticking out of them. Amy, you have a great week and a safe week.
Okay, you too. Talk to you next week.
You stay right there, folks. We're coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email TigerFund at TFNN.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the TFNN.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials finished down at 331. NASDAQ off 74. S&Ps off 29. And we did have an expansion of volume, folks, in all the indices. Now, folks, let's bring up our man, Mr. Chad Coco from TD Ameritrade Thinkorswim. Chad is the best option show on the planet, folks. It is broadcast every Tuesday, noon to 1 Eastern Standard Time right here at TFNN. And don't forget, no matter what city you're listening to us in, if you're listening in your car, on the radio, you can also get us right on your cell phones at tfnn.mobi. That will give you the full audio. If you want to get the video, the Tiger TV with the audio, just go to tfnn.com, and you'll see the TV on the top right-hand side. You hit that. You get the TV, the audio, the video, the charts, all of the above. And if you haven't test drove TD Ameritrade Thinkorswim platform yet, folks, it's an outstanding platform. I use it each and every trading day, whether I'm trading options, futures, commodities, or the equity market. Okay, it's one platform, absolutely awesome. You just hit that button, it's up and going. You can come over, test drive it right here, right now. They'll let you paper trade with it, so you can get used to the platform, number one, get used to the different strategies that you may want to use. Now, what Chad is phenomenal at is setting up strategies, whether you're a bull or a bear, folks, okay? Strategies are what it's all about inside the option market. It's not about just putting it on green and putting it on red. Tomorrow, 12 to 1 Eastern Standard Time, you can listen to Chad. Chad Coco, what's going on?
How's it going? Happy New Year.
Happy New Year, man. Let's make it a great one.
Yeah, let's hope.
Totally. Well, we're starting off with some nice volatility.
Definitely are, yeah. It seems like it's going to be a trend going on.
Yeah, I mean, what's interesting here, actually, is that, you're up 2 on the VIX, but that's really not a lot for the type of market we had out here today, huh?
Definitely agree, yeah. So we saw a little bit of increase in volatility over last week, and then with the market collapsing or correcting a little bit today, we're expecting a little bit more of a pump, but didn't really get it.
Yeah, that's interesting, man. It really is. So, and what happens there, folks, many times is this. This is what's wild. If you don't get the fear, you will continue the same way we're going, meaning on the way down, because the market will get that fear going.
This is true.
Yeah, the market's very good at that, no doubt, no doubt. So when we're looking into 2015, what type of strategies are we going to be setting up? What type of strategies are you going to be teaching out there?
Well, so for tomorrow, I'm going to start back with some basics in New Year, so might as well get people back into it. After talking with friends and family over the holidays, I realized that the options education that's out there, people are a little bit they're a little worried about getting into the options market. So hopefully try to bring some clarity around how to get in, just to get a little bit started into that.
You know, see, this is cool you're bringing this up. And this is with your own family, too, even though you're in the business, right?
Right.
And so what happens, folks, is this. And I've been in this a long time now. So what does happen is that, you know, you're so used to certain things that sometimes I think that people are used to options now. Do you know what I'm saying, Chad? So it gets intriguing because I remember, folks, that the regulators in general, so check this out, folks, this is insane. The regulators in general always thought the option market was more risky than the equity market. And they always had all these regulations that you had to basically, these disclosures, which, listen, I'm all about disclosures. It should be out there. But the thing that always cracked me up is that they would make the option folks have so many more disclosures than the equity people. I'm saying to myself, this makes no sense at all. Because the difference, folks, is that inside the option market, you have defined risk. I mean, you know, because the option broker won't let you basically just go up and sell and buy, sell puts or sell calls without basically understanding options, okay?
Yeah, exactly.
Yeah, and so it's intriguing, you know, listening to you saying that, and that's great that you get that feedback, particularly, you know, from your family and friends because you're in the business, because, you know, you end up talking with them anyway.
Exactly. Yeah. So people always hear like anytime you start talking about options, you have to throw that disclosure out there. If you're talking about stock, I don't need to say that disclosure.
I know.
But trying to clear that up, trying to clear up the confusion around that is pretty big deal, I guess.
It is because what has also happened is this. So let's just run over something, just so you can see, folks, the difference, right? People, let's just say you're buying the Index 100, right? If you want to buy the Qs, okay? So you buy the Qs, and you know, the Qs are at 101.43 right now. Okay, so if you buy them on, you know, margin, you're putting up 50 grand. You know, I'm saying 1,000 shares. I'm just saying 1,000, so I know you're not buying 1,000 shares, but just to make it even, clean, all right? Okay, no, we'll make it 100 shares. So let's say we put up $5,000, okay? What the difference is that if you're a bull out there and you say, okay, listen, you know, I want to be in the option, I want to own them. And if you want to go out to February, well, you could buy the February's hundreds at $3.69.
Yeah, and your requirement on that one's going to cost you $300 as opposed to your, what, $3,000, $5,000, or whatever you're going to put up for the
$300 exactly versus $5,000. And
yeah,
now,
that's your overall risk. That's the most you can lose on that.
Right. And so watch this, okay? So if, in fact, you know, it goes up. Let's say it goes up from 101 to 110. That's great. You know, you made $9,000. You made $9 on your 100, so you made $900. You put $5,000 up to make $900. If it went up to 110, you just put $365 up, and you would have made So you made $600 on your $365. Okay.
Right.
So that's on the way up. Okay, now let's just do the opposite, folks. Let's say that, okay, you were wrong on the deal, and it goes down. On the 101, let's say it just goes down $10. It goes down to 95, or it goes down to 91, rather. What ends up happening there is that you just lost $1,000, okay? Bottom line, it could go lower. On the option, you lost, but guess what? You lost $365.
Yeah.
You know, so get your head wrapped around them, folks, because it's a defined risk deal. Now, that's the first one. The second one may be more important for a lot of the listeners that we have out here, Chad. And what it is that, you know, you get a lot of people that have been invested for a long period of time, right? And they might not want to sell. They might see this and, you know, we've had so many, pullbacks in the last 4 years, but the market keeps going higher, right?
Right.
Well, folks, what you can do there is that you can sell calls against your position, but just it's called the delta neutral, that you're not going to sell more calls than you have. But let's say you have 100 shares of a Q. Well, guess what? You can sell one call. And you definitely want to be happy if you get called out. But if you don't get called out and the market goes down, well, you get that premium, you know, so.
Yeah, worst case scenario, you're selling your stock higher than what it was trading at that day anyways. Best case scenario, you're lowering your cost basis.
Exactly, you know. So, you know, this is something that you want to wrap your head around, folks. And when you do it, just take your time. You know, Chad is an outstanding show. It's every Tuesday, 12 to 1 Eastern Standard Time. You can get it anywhere you are, right on your cell phone. Makes it clean, uncomplicated, and the Thinkorswim platform, folks, that's exactly how the Thinkorswim platform is set up. It's an outstanding platform, so go check it out. So, hey, has the cold spell come into Chicago yet?
Yeah, it was -3 this morning.
Wow, no, this is a dangerous one coming in, right?
Yes, that's what they're saying.
-3. Man, oh man. Okay, well.
Chills your bones.
Oh baby, that's it's you don't even want to hear it. It's like 74 down here.
Yeah, no, I hear. I was in Phoenix over the holidays. And
oh,
it was,
sweet.
It was actually warmer in Chicago than when it was at night in Phoenix, which was kind of surprising to me.
Is your wife from Phoenix?
No, my family's moved down there, though.
Oh, okay.
No
Nice.
words for parents.
No, they got smart. That's a beautiful thing.
Sure is.
Okay, man. Well, listen, we appreciate all the help, all the education. We look forward to the program tomorrow.
It's my pleasure.
Okay, man. Have a great one. Have a safe one.
Yep.
And market-wise out here, folks, what you do have around the world, by the way, is that you had the FTSE 100 down 2% today. The CAT was off 3.3. The DAX was down 2.9. All with volume on the way down. Our markets really weren't that bad compared to them. The Dow was only down 1.8. The NASDAQ 1.5, and the S&P is 1.8. And what you have there is that, we have big numbers, and that's not a lot of percentage on the way down. But because we haven't had a correction so long, people will think that it actually is. I remember in 1994 when one of the first corrections came in, and the market hadn't corrected for probably, at that point, it hadn't corrected at all about 7 or 8 months, never mind years. And bottom line, people were almost just totally freaking out on basically about a 13% correction. And the one after 94 came 96. And 96, the exact same thing happened. The 96 correction was probably only about 12 or 13%, but in fact, folks thought it was huge. And they did get hurt, by the way. In 96, folks got hurt beyond belief. Not as bad as 98, but pretty bad. And what it had to do with the amount of leverage that folks in the marketplace had. And right now, the amount of leverage is at the high. The margin leverage, folks, in the NYSE is at its high, all-time high, that is, okay? So that's a problem for folks that are long and strong. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow Industrials closed down 331. NASDAQ down 74. S&P's off 29. We're going to be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the path of least resistance under trading newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow finished down 331, NASDAQ off 74, S&P's off 29. And we had some juice come in this market, by the way. Last 10 minutes was another 100 million shares on the NYSE. We did 844 million on the way down on the NYSE, which was a nice expansion of volume. And the NASDAQ, we did 1.7 billion. Bottom line, what I expect you're going to see is that you're going to expect to see lower prices in Asia tonight, and this will continue going right into Europe tomorrow. Let's get to Rob in Paramus. Hey, Rob, what's going on?
Hey, Tom, how you doing?
I'm doing great, man. You having a good day out there?
Yeah. Hey, I kind of went on vacation for 3 weeks, and I have a question.
Yeah.
So I'm out of the market completely.
Good for you.
Would you go short now or wait for a pullback? Or?
Okay, so let's take a look at this. Okay, so you have your S&P. So if we start with the SPY, what you have is this. What you'd like to see is an intraday bounce. It's going to be tough to get, though, because the SPY right now is at 201.72, and that's going to go right into 197 tomorrow, I expect.
Would you like to slowly go into this market?
Well, what you have to do...
I have the same feeling it may not bounce too much.
No, I know. So what you have to do is that you have to be ready. The way you could do this, okay, is like this, is that you sell into the market immediately, right? and you do not give it any breathing room at all. So what that would mean is this, because my take is that, yeah, we're going lower, but now it's the money management inside of this. Because the S&P, like the SPY, just went from 208 to 201 in 5 days. So in that context, then what you do is that you're at 201.72, and I'd say, okay, then you got to put a stop like over 202.88. So you're really only giving that $1, right? Mm-hmm. And inside that, you're saying, now I'm just going to use this one. You could do any of the indices like this, right? Then you say, okay, I got $1. I'm going after the first swing point of 197, so that's $4, 197.86. So $1 for $4 works. With the larger aspect that you're going after 181. The 181 October 15th swing low is where this baby looks to me like it wants to go like ASAP.
You think it'll take a couple months or more?
Oh no. This my take would be this would you're talking a couple weeks. Yeah, I think this is going to be fast. Now, okay, so now stay with me here, okay? Because what I'm going to go through right now, folks, I want to show you something, okay? When you're coming into bottoms, number one, and it was really cool when I was just talking with Chad, because I realized that, see, this VIX, number one, should have went a lot higher. So the fear, you had the fear going on New Year's Eve night. It went up quickly. It went up from 1586 to 1991. So the fear was there. Today, however, it's like, they're not that scared. If we go over to the tick, these are fear indicators that I'm showing you right now. If we go to the tick, what you had inside the tick is that you went to a minus 1155, but guess what you had? You had a plus 1059. It's like, okay, people are still buying that dip. Now, the trend is a little bit different. Now, the trend is the overall index that you want to watch real closely at the beginning, okay? And what the trend did do is this. The trend finished out at 2.18. So what that's saying is that there was a large amount of selling under the marketplace, and the selling, folks, was on the same stocks. So this index here right now is running at 350, 455, 50, 650. We're at 675 on this baby. If you don't get in tomorrow, right, and then you see the trend go like the 2.5 or something, then absolutely just wait for a bounce. Because when this trend starts hitting on a 5-day basis, 12, 13, 14, when you cumulatively add it up, that would be when the thing is be ready for a bounce.
Okay.
Okay, man. Have a great one, man. Have a safe one. And what we will have, folks, is that, let's go over to the XAU, the HUI. XAU, HUI start moving once again with juice, folks, okay? The XAU right now is up $1.30 at 71. This is going to go after 75.49. I expect you're going to see it quickly within the next couple days. HUI, the Gold Bugs Index. Gold Bugs Index right now is up 430 at 172. That swing point up there is 181.33. We had a couple of these equities get over the swings with the juice on them. You had Rango Resources up $1.64. You're at $70. That's going to go after at 71.36 tomorrow. So Rango is going to be one of the first ones that are going to tell us, hey, can you get up and over that level? That swing point had 800,000 shares, 880 to be exact. We did 976 today. And Eagle actually started moving on Friday, this past Friday. Eagle went from 24 to 27. Monster volume for, actually, no, it was Friday. We were open. But that's huge volume. That had 4.4 million shares. We did 3.3 today. You're at 27.45. And that looks like it wants to launch also. FNV, which is Franco-Nevada. Franco-Nevada had the juice out here today. That was up 2.62. And Franco-Nevada is saying, hey, that's going to 56. You're at 51. Franco-Nevada as an indication that the actual physical gold contract, that's how it's a royalty company, that also wants to go. If you haven't test drove the gold report yet, folks, it's a great time to do it. Go to TFNN, go to newsletters, go to investments newsletters. You can test drive it right now, 30 days, absolutely free. My take on this right now is that And this is where the divergence comes in. The divergence came in the context of the dollar at highs, the gold market refused lower price, had lighter volume, has had 4 separate signs of strength. The 5th one had 5 separate signs of strength coming off the November low bottom. We're at 1205. 1239 is game. We can get 1239 tomorrow. We get 1239 tomorrow, you're going to see a major breakout, because once we get over 1258, see you later. After 1258, you're going to be at 1333 in a heartbeat. It looks to me that this is a larger one-way route. And the one-way route in gold, silver wants to go higher. And on a fundamental basis, by the way, it makes sense, too, because what you do have is that if we look at this and check this out, this is pretty cool. If you happen to watch on Tiger TV, remember, it's I'll put this in euro terms. In euro terms, folks, gold is a major breakout today. And I want to thank our man Z in the den for picking this up. Major breakout. In euro terms, we are at 10.12, and it basically blew away its 9.99 level. And that's saying in euro terms, man, this thing's going to the moon. But you can't go to the moon just in one terms. That means that we're going up in the dollar also. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks, visualize like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking there right here tomorrow. Go get them, folks.